ครับสวัสดีครับ First of all thank you so much for joining Q1 2017 Opportunity Day presentation Thai Oil Public Company Limited today. Before we go into the presentation, let me introduce the speaker from Thai Oil. On my left, คุณนันทการบำรุงสุขสวัสดิ์ Assistant Manager Investor Relation, and myself, ชัดชัยศิริวิทย์ Investor Relation at Thai Oil. So today, I think the presentation we will cover the 4 sections. But before we move into the main presentation, let me recap investor about our success in terms of the sustainability. For Thai Oil, we are the member of the Dow Jones Sustainability Index for the past 4 years, and we are also the leader in the oil and gas business for the past 3 years. I would say that sustainability is one of the focus of the company for the past few years besides the business as usual operation นะครับ and in terms of the main presentation today we will have 4 sections. The first section just to recap investor about the company overview of the business, and then the second section will cover the key highlight in the Q1 performance, and then the third section will go into the analysis of the Q1 performance, and then the last section we will discuss about the market outlook for the second half this year and also full year this year. So let me walk through a little bit about the Thai Oil Group company overview. We can start on the business structure of the company from the left to right. The main business of the company is the oil refinery. We are the largest fuel refinery in Thailand with the capacity 275,000 barrels per day. Besides the oil refinery, we also integrated or upgrade some of the barrel from the refinery into the petchem and also the lube base. And these 3 main integrated business units contribute around almost 90% to the group net profit. And the rest 10% mainly come from the power generation and also the other supportive business, for example, the transportation and the alternative energies. And in terms of the business track record of the company, I would say that we are a 56-year-old company. We start as the first refinery in Thailand, and right now we are the largest fuel refinery in Thailand. And I think that's the quickly brief about the company overview. We can discuss further about the second section on the key highlight in Q1. Let me start by looking at the market driver of the company. As mentioned earlier, that our 3 main business is oil refinery, petchem, and lube base. So if we look at the market in Q1 for the refinery, I would say that if we look at the refinery margin in Q1 is improving compared to Q4, and the main supportive factor is come from the crude premium. As you can see that our crude premium actually came down in Q1 compared to Q4 due to the abundant crude supply in the market. And on top of that, some of the product, for example, the gasoline spread also strong in Q1. So this factor helps support the refinery margin in Q1. As reflected in the market GRM, we reported at $6.5 per barrel. And for the next key business unit is the petchem on the aromatics chain, more or less similar to the refinery, that the spread was actually better compared to last quarter, supported mainly by the strong downstream demand, polyester and the styrene monomer basically. And on top of that, we also have the other supportive from the delay of the supply addition, especially from India. So this factor helps support the petchem margin, especially on the aromatic side. So you can see from the contribution to the group margin in Q1, we reported at $2.1 per barrel, increased from $1.6 per barrel in Q4. And lastly, the base oil business unit. The market environment also support the margin, driven mainly by the Thai supply from the planned and unplanned shutdown in Asia, and also the strong buying interest, particularly in China, prior to the maintenance in Q2. So the contribution from the lube base to the group margin also we reported at $0.9 per barrel, increasing from $0.5 per barrel in Q4. So all in, if we look at the market group integrated margin, which combine the margin from the refinery, aromatics, and lube base. In Q1, we reported at $9.4 per barrel, increased from $8 per barrel in Q4. And if we move further to besides the market, we look at the key activities of the company in Q1. On the left-hand side, we can look at the operation or utilization rate of the company. I would say that in Q1, all the unit, refinery, aromatics, and base oil, we fully utilize our production so that we can capture the good margin and also achieve the high utilization rate. And in terms of the commercial sales, especially the refinery product, we still maximizing sales in the local market and also the Indo-China market, so that the other export we minimize at only 5%. So this further contribute to our margins. And on top of that, besides the maximizing the margin, we try also to control our cash cost as reflected in Q1, that our group cash cost only $1.9 per barrel, consisting of 1.4 operating cash cost and 0.5 net interest expense. So I think that's mainly on the term we call the operational excellence. And if we look at in terms of the growth and the profitability improvement of the company, in Q1 we have one project that we COD in March, which is the Lorry expansion project. Basically, this project will enhance our capability to supply more product in the local market, and we expect that this project will enhance our benefit approximately around 10 to 15 cents per barrel from more local sales. And besides the BAU operation, we also try to initiate more activities to enhance our profit, which we have information later on. And in Q1, we can achieve the profit improvement activities around 1.2 billion baht. And last but not least, in terms of the credit ratings of the company, two agencies already affirm our credit ratings, which is S&P affirm at BBB flat and stable outlook, and Fitch affirm at AA- and stable outlook as well. And Moody's also in the process of reviewing our credit ratings, but I would say that all the credit ratings remain at good level, or the investment grade. And if we look at on the right hand side in terms of the net profit that we reported in Q1, net profit that we reported to the Stock Exchange of Thailand Q1, we report around 7 billion baht, improving from last quarter, which is 5.8 billion baht. Besides the positive market environment and also the strong operation, as mentioned earlier, that we try to initiate some of the activities, for example, the profit improvement, where we can achieve 1.2 billion baht in Q1. And this is the more information of the profitability improvement activities that we have done in Q1. It's basically composing of two main activities. The first one is the margin improvement, of which we try to enhance our production process, the sales pattern, and also the energy consumption in the process. Try to squeeze more from our existing asset. And in Q1, we can achieve 1.1 billion baht from these activities compared to the corporate plan. Another activity is the cost management. We conduct it through the project so-called the Orchestra. And Q1, we can achieve around 45 million baht. So all in 1.2 billion baht that we can achieve in Q1. And I think that's the main highlight for the Q1. And for the detail of the performance analysis, I will pass on to Kun Nantaka to elaborate more in terms of the analysis of Q1.
Okay, thank you very much, Kun Chatchai. For this agenda, I will spend around 10 to 15 minutes to talk about the more details of the performance of each business unit of Thai Oil. So let me start with the refinery business unit, which is our core business first. In the slide shows the Thai Oil refinery reliability compared with the average industry in Thailand. So in the top left graph, you can see that Thai Oil can run at high level at 111% in first quarter, which is the highest rate ever, I would say, and compared to the average industry at 88%. it was actually lower than the previous quarter, that because of there were maintenance shutdown in the local refinery. And the main cause of the high run rate of Thai oil, it's because of strong demand, which you could see in the top right graph. Domestic oil demand in first quarter grew around 3.5% compared to the same quarter of the last year, mainly from the jet kerosene 5.8% growth, more gas 4.3%, and diesel 2.6%. And with the reliable of Thai oil refinery and strong domestic oil demand, that's why we can maximize our petroleum sales in the domestic market at 87%, which shows on the on the bottom left graph, 87% sales in domestic market compared to the industry average at 83%. And we left only 13% to sell export. The majority of export portion, 8% goes to CLMV country, where we got as much as the same price of Thailand, and only 5% goes to the Singapore. If you see in the next slide, this shows the gross refinery margin. For the overall gross refinery margin in Q1 was so strong. As I mentioned before, refinery utilization rate, we can run at 111%. And if you see in the product spread in the table in the middle, you can see that most of the product spread, it's slightly decreased from the previous quarter, except the gasoline spread, which is slightly better from the tight supply, and also the demand was still strong. But moreover, in terms of the crude premium in the right-hand side, Thai oil used the crude, which name is the Murban crude, which from the UAE. It is a light crude, and the light crude premium of Murban in the first quarter is lower to $1.6 per barrel compared to the 2.2 in the previous quarter. So the lower crude premium helped support the gross refinery margin in Q1. Accordingly, market GRM that we reported in first quarter was $6.5 per barrel, increased around $0.5 per barrel from previous quarter. However, in terms of the crude side, the Dubai crude price is slightly lower at the end of the quarter, around $1 per barrel. That's resulting in the stock loss that we reported around $0.2 per barrel. For all in all, accounting GRM would be the $6.3 per barrel in the first quarter. And next, let's move on to the Aromatics and LAB business units, which gave robust contribution to our group. As you can see, the aromatic production in the top left, we run at 90%, which is a fully run, and it is higher than the normal rate of 82 to 85%. I would say that it because of the strong product spread, which you can see in the paraxylene and benzene spread over the ULG 95. Both of them increased a lot in the first quarter, especially the benzene, because of the tight supply in the US, resulting in the good demand, import demand from the Asia. And that's why we reported a P2F, or product to feed margin of aromatic business, at $126 per ton, significantly improved from the fourth quarter, and resulting in the GIM contribution of $2.1 per barrel, which including the LAB margin. Next, it would be the lube base oil business unit, which is also as good as the refinery and petrochemical. So in the base oil production, we can maintain at high level at 88%. And for the product spread, both of base oil and bitumen still at a good level, significantly improved from the fourth quarter. And that's why we reported P2F of base oil business unit at $116 per ton. That could contribute to the group integrated margin of $0.9 per barrel. So before moving to the other business unit, let me conclude all three main business units of Thai oil in this slide. Upper left graph shows the gross refinery margin. As I mentioned, Q1, $6.5 per barrel. It's the market GRM, but we have the stock loss 0.2, so we have the accounting GRM at 6.3. And if you include the aromatic margin and lube base oil margin on top with the refinery margin, you could get that 9.4 GIM in Q1, which is improved around $2.9 per barrel on top of the market GRM. And if you consider into the cash cost side in the upper right graph, it is a refinery cash cost. We reported $1.4 per barrel of refinery cash cost, consisting of $1 per barrel of operating costs and 0.4 as the interest expense. And if you include aromatics and lube base, the group cash cost would be $1.9 per barrel. You can see that for the cash cost side, it's barely increased, only $0.5 per barrel, but in terms of the margin, it's increased a lot, almost $3 per barrel. So this is the beauty of the fully integration of the refinery with petrochemical and lube base oil. Now it comes to the power business unit, which is we classify as an earning stability for the Thai Oil Group. As you can see in the Thai Oil Power has classified into two types. First, it's under our plants, power plants that we have on operation, under the small power producer program, under Thai Oil Power, which is our old plants, and top SPP, which is the very new power plant, which is COD in the second half last year. And another type is we have equity holding shares in GPSC, total around 24%. And in this quarter, the first quarter, you can see that with the steady run of the power plants, power sector contributes steady electricity and steam in this quarter, resulting in the good level of net profit around 586 million baht, consisting of 180 million baht from equity gain from GPSC and 407 million baht for power plants, our own power plants. And next, it's about the overall performance breakdown by business unit. Thai Oil has total 7 business units, and all of business unit had a reliable production, which you can see in the middle graph. All of that run at fully run, except the marine sector, which is slightly lower than the previous quarter due to the dry docking of some vessels. And with the reliable run of business unit, that contribute to the net bottom line of 7,000 million baht. I would say that the main contribution will still come from the refinery, 4.4 billion, aromatics 1.2 billion, and 489 million baht of lube base oil. Altogether, 3 main business units contribute around 87%. The rest 14% mainly come from the power plants. So now let's move on to the first quarter consolidated profit and loss. You can see in this graph that our operating capability shows that EBITDA was slightly lower than the previous quarter. So that because of in the previous quarter we recorded huge stock gain, while in this quarter we record slightly stock loss. But if it's exclude the stock gain or loss, it shows that EBITDA excluding stock gain or loss is significantly improved from the previous quarter. That because of strong margin. And if you deduct financial charge and FX gain, which we have around 1.3 billion FX gain this quarter, mainly because of Thai baht appreciation, and we have the USD debt around 1.1 billion USD. And that comes to the net profit around 7 billion baht. It's accounting for earning per share of 3.47 baht per share. And the effective tax rate, you can see that we reported 17% of effective tax rate. That's higher than the previous quarter because we fully used up the BOI privilege for tax exemption of environmental project. And if you're looking at the cash flow of Thai Oil Group, in this slide shows that the main contribution come from the operation of Thai Oil in the first quarter. As you can see in the top left box, cash flow from operation, it's around 10 billion baht. And we invested in the capex around 1.1 billion and invest in the private fund as a part of a cash surplus management of Thai oil. And then as a result, we have the free cash flow around 7 billion. And then we have the loans repayment of 5 billion and interest expense of 1.5. Then we have cash position is increased around 800 million baht. And if you include cash and short-term investment, so as at 31st March of this year, we have around 60 billion of cash and short-term investment. So lastly, let me present the strong financial position of Thai Oil. If you can see in the statement of financial position in the top left graph, total asset as at 31st March of this year, increasing slightly from the ending last year to 218 billion baht. That was from the better operation from the first quarter. And the efficient use of asset could be reflected as the ROIC in the table below. We reported around 18.5% and return on equity at 20.5%, which is quite high. And if you consider in terms of the debt side, we have total long-term debt around 68 billion baht. And if you deduct huge cash and short-term investment that we have around 60 billion, we have net debt around 9 billion baht. And the portfolio of debt, 60% is the USD currency and 40% is Thai baht. And average loan life, we around almost 12 years. And that's why both of financial ratios of Thai Oil, net debt per EBITDA and net debt per equity, still maintain at a healthy level. For example, net debt per equity only 0.1. And that's why the credit ratings also affirm our rating at the investment grade. So that's pretty much covered the performance analysis. Next, Khun Chatchai will be presenting in the industry outlook.
For the last section, for the market outlook of the company, we focus on the 5 main market from the crude oil to the refinery market and also the aromatics base oil. And lastly, our new product, since we operate Q1 last year, the linear alkyl benzene, which is the feedstock for the detergent producer. We can start on the crude oil. Based on our projection from the Thai Oil and also the team within the PTT group, we reference the Dubai crude price as the benchmark crude. And based on the projection, when we have formulated this kind of the projection, is this before the OPEC meeting. So we set the 2 scenarios at that time. The base case where we think that the OPEC will extend the production cut, and the low case, which is the OPEC might not extend the production cut or more supply from the non-OPEC production. But in general, I would say that we expect the Dubai crude price to move around 50 to mid $50 per barrel range. And the supportive factor would be the extension of the supply cut by the OPEC, which is 9 months. But the upside of the crude price will be capped by the more supply from the countries like US, the Libya and Nigeria. We can start on the first factor of the supply cut from the OPEC. The figure A, we show the compliance rate of the supply cut in Q1, January, February and March of the OPEC and also the non-OPEC. Based on the figure 1, you can see that the compliance rate for the OPEC group this time is quite high compared to 2009. So for example, in March, the compliance rate of the cut more than 100%, while for the non-OPEC cut is actually lower than the target, which was only 64%. So all in, if you look at the figure B, for the past 3 months in Q1, the combine of the OPEC and non-OPEC cut is approximately around 1.2 million barrels per day. And if we compare that to the demand growth for the oil this year, I think the major research expect oil demand growth this year should be approximately around 1.2 to 1.3 million barrels per day. So based on this figure, supply cut and also the oil demand growth, what we expect is that is reflected in the figure D, which is the declining of the oil inventory globally over time. And based on our projection, right now inventory is on the high side, but we expect it to be drawn down until the year end. So I think that's the rebalancing of the oil market that we expect this year. However, as mentioned earlier, that high oil price, more than $50 per barrel currently, it attracts a new producer coming into the market, especially the US. And as we can see, the shale oil production in the US increasing over time since the oil price increased. And on top of that, in figure A, there will be the completion of the pipeline, so that there will be more export from the US in the market. And the pipeline is a Dakota pipeline that we expect to start up in May this year. And on top of that, for the OPEC production, for some countries that don't have the quota to cut, for example, the Libya and the Nigeria, we expect the recovery of the supply from these two countries as well. So these two main factors, US and also Libya and Nigeria, will cap the upside for the oil market. So what the implication is that it is reflected in the figure D. Figure D basically shows the drawdown of the oil inventory, but with more supply from the US, Libya and Nigeria, the implication is that the drawdown will be prolonged than what we expected. But in general, the oil market still enter into the rebalancing period. So the oil price should be supported around $50 to mid $50 per barrel. Could be the range based on the factors that we discussed earlier. Moving on from the oil price to the refinery market, we can start from the benchmark gross refinery market in Singapore. And you can see that Q1 this year, Singapore GRM was at $6.4 per barrel. Actually, slightly increased from last year average. And if we look at Q2 to date, the Singapore GRM still maintain around $6.4 per barrel. And if we break down into the key component underlying the Singapore GRM, we can see that the gasoline spread still more or less strong and support the GRM, while the middle distillate, which are the diesel and the jet fuel, is more or less quite stable. And we have more information in the following slide. We can start by looking at the gasoline spread in the region. I think that the key point supportive the strong gasoline spread is on the figure A, which is the demand growth. In Asia Pacific, you can see that the red line is the demand this year, and the black line is demand last year. You can see that in general, gasoline demand growth this year, we expect to grow at least around 4-5% compared to same period last year. I think that's the main supportive factors. And on top of that, if we look at the US, which is the main consumer of the gasoline product, the demand is still growing as well, but at a lower figure compared to the Asia Pacific, but still growing. So demand growth quite strong for the gasoline in general. While if you look at the supply, we have some supply disruption, especially from the Middle East. One of the big refinery in the Middle East, which is in the UAE, they have the problems of the gasoline making unit, so that supply of the gasoline is quite limited as well. So these two factors, both demand and supply, help support the gasoline spread in general. And if we move on to other two products, which is the diesel and the jet fuel, I think that the picture is more or less similar to the gasoline, where the demand growth is still quite okay. For example, the figure A, you can see that both Asia Pacific and the US, the demand for the diesel and jet fuel, which is the middle distillate, still growing. Asia growth, we expect in second half growth around 2.2% compared to last year. And the US, the growth we expect almost 1% compared to last year. And on the supply side, I think the key factor on the supply side is on the refinery maintenance globally, where we think this year, which is reflected in figure B, the colorful bar chart, it shows the refinery maintenance globally this year. You can see that second half this year, the bar chart is actually higher than the black dot, which is the maintenance figure for last year. So the point is that the supply this year should be limited compared to last year because of the higher maintenance. So limited supply and also the growing demand should also support the spread of the middle distillate. More or less similar factor to the gasoline. I think that's the short-term factor for this year. And if we extend the period, looking at the medium term a little bit to the demand, the supply of the refinery in Asia Pacific and the Middle East, we can look at the colorful bar chart which show the new refinery addition from each country. The negative one is the closure. So the black dot is a net capacity addition this year, net capacity addition, and compare that to the black line, which is the additional demand. So I think the key message from this chart is that from 2015 onward, additional demand is higher than the additional supply. So in general, the market for refinery in Asia Pacific and Middle East is become more tightened over time as reflected in the higher utilization rate in the region. So in conclusion, the refinery market this year should be still supportive, driven by the limited capacity addition and the strong demand. And in terms of the local market in Thailand, which is our main market, as mentioned earlier, that we sell the local market almost 87%. And I think the key message in this chart, you can see that the oil demand in Thailand, the actual figure for the first 3 months, the growth rate was 3.5%, which is more or less similar to the GDP growth level. Even though the growth rate numbers start to normalize compared to prior year, but in general around 3.5% still relatively good level. And full year we expect the oil demand growth in Thailand to be around 2.8%, which is kind of the normalized number, but still relatively higher than the historical level, supported by the oil price that's still around not so high compared to the past few years. And the next business is the petchem on the aromatics. If we look at the aromatics market, the two main products that we are producing and we sell is the paraxylene and the benzene. And if you look at the spread of the paraxylene and the benzene against the gasoline, this year is all in all is quite better compared to last year, especially in Q1, and it's normalized a little bit in Q2. The main factor I'll discuss later on, but just to recap or to highlight the key factor that support the aromatics market this year is a combination of the short-term and the medium-term factors. The short-term factor, especially the factor that impact the price in Q1, is basically the unplanned shutdown of the aromatics plant, especially in the US. So that's the short-term factor that helps support the margin in Q1. But in the medium-term factor is kind of the delay of the supply addition, which we have information in the following slide. So with the medium-term factor, the delay of the supply addition, so the balance in general for the paraxylene and the benzene should be better than what we earlier expected at the end of last year. So that's why what we think this year, the aromatics margin, both PX and benzene, should be supportive compared to last year. And if we look at a specific product, for example, the PX, I think the key we can start on the figure A. Look at the total supply addition this year, 2017. We expect the capacity addition this year to be around 2 million tons, and this is the lower than what we expect in Q4. I think in Q4 we expect the supply addition this year almost 3 million tons. So with the delay of the capacity addition, especially from Vietnam and also from Saudi Arabia, so capacity addition this year less than 2 million compared to the additional demand, which is typically around 2 million tons as well. So all in, it seems that the market is quite balanced, as reflected in the figure C, especially the red line, which is the operating rate this year compared to last year, which is quite more or less quite stable. So this factor should help support the PX or the paraxylene spread this year. And if we move on to other product under the aromatics chain, which is the benzene. Same story, because of the supply delay of the supply addition. So this year we expect only 1.3 million ton capacity addition, lower than what we expect earlier, and compared to the typical demand growth, which is more than 1.5 million ton per annum for the benzene product. Then what we expect this year, we expect the market will become a little bit more tightened, as reflected in the red line, which is the operating rate for the benzene market, which we expect to be slightly increased this year compared to last year. So that's why if you look at the benzene spread this year so far until now is actually better than last year. That I think that's the two main product under the aromatics chain. And lastly, for the base oil and bitumen, for the base oil product, you can see from the table that the spread so far this year actually better than last year. And I think that the key main supportive factor for the base oil is on the supply side, as reflected in especially figure B. Now, if we compare this year compared to last year, you can see that the capacity addition, especially in the AP, which is the Asia Pacific, this year almost no new capacity addition, only 0.2 million ton compared to last year, which was 1.3 million ton. So this year, no capacity addition basically in Asia Pacific, while the demand is still growing. So that's why the spread for the lube base in general more or less quite strong compared to last year. Okay. And for other product under the lube base complex is the bitumen. Bitumen is more or less on the demand side, because if we look at the demand growth, especially in figure A and figure B, figure A shows the ASEAN demand for the bitumen growth for the past 3 to 4 year growth rate per annum was very high. We're talking about double-digit growth. For example, during 2013 to 2016, the growth rate is around 22% per annum. And if we zoom down to Thailand bitumen demand, the growth rate is approximately around 8% per annum. So with the strong demand growth, while we expect no new capacity addition similar to base oil, so the bitumen spread over time is quite strong compared to last year as well. Okay. So I think that's the three main business of the company. And then lastly, the new product that we operate since Q1 last year, which is the linear alkyl benzene, which is the downstream of the benzene product. Basically, the way we produce the LAB, we use the existing feedstock that we have, which is the jet fuel, and also the jet fuel from the refinery, and also the benzene from the aromatics plant. We put together and produce the LAB product, which is further used by our customer to produce the detergent. And we operate this plant since Q1 last year. And if we look at the LAB spread over the feedstock, it's more or less quite stable. Because as we moving toward the end user, the margin, I would say that is more or less quite stable compared to the upstream margin, for example, the PX and benzene that we mentioned earlier. So the spread is more or less quite stable. And this year, besides the ongoing demand growth, which is tracking the economy or the GDP, another factor that impact the LAB spread is the schedule of the maintenance or the closure of the supply in the market. And this year, you can see that especially second half this year, the closure of the LAB plant is relatively higher than first half. So this should be the supportive factor to the LAB margin, at least in the short term. But if we're talking about the full year or the medium term, the demand growth still the main driver for the LAB, and the demand growth typically tracking the GDP as mentioned. So we're talking about growth rate around 2 to 3% per annum. So in conclusion, on the market outlook on the refinery, starting from the crude oil, we expect the oil price to have the supportive level around today level mid $50 per barrel, supported by the extension of the supply cut from the OPEC, and also the strong demand. But as mentioned earlier, that the upside of the crude oil will be capped by the supply from the non-OPEC, especially the US, that's still pumping more oil in the market to cap the upside. And given the not so expensive oil environment, I would say that is a good environment for the company like Thai Oil, which is the refinery company, because or not so expensive oil price, the demand growth still okay. And also, given more supply in the market, especially the US, it means that the dynamic of the oil market is quite competitive. So we can have more negotiating power to the crude oil supplier. So we can secure crude at the lower price, basically, in this environment. And that will help in terms of our refinery margin, as reflected in the Singapore GRM or Thai oil GRM that we discussed earlier. And on top of that, in terms of the demand and supply itself of the refinery, also quite supportive. That demand growth growing, tracking the oil demand, while the supply addition, as mentioned earlier, that this year and the next few years, the new refinery addition in the region is quite limited. So oil in demand growth is higher than the supply. And on top of that, with the abundant crude oil supply in the market, we can negotiate to buy our feedstock at a lower price, and all of which will contribute to our refinery margin that we can widen, or it will be higher than the historical average. For the aromatics, in general, with the delay of the supply addition while the demand is still growing, we expect the balance for the aromatics should be okay this year compared to last year. But in the short term, during the startup of the new plant, there will be some pressure, especially in Q2. But if we look at the full year, it should be better compared to last year because of the delay of the capacity addition. And for the base oil, this year should be better than last year because of the no capacity addition this year while the demand is still growing. I think that's the key for the base oil. And lastly, for our new product, the LAB, we expect a stable market, as mentioned earlier, that the downstream closer to the end user, the margin is quite stable, and also the margin will be driven by the demand growth, which is tracking the economy in general. So all in the outlook for the company second half this year should be supportive for all three main business, refinery, aromatics, and lube base. And I think that's all the key highlight and also the outlook of the company Q1 2017. In case there is any, okay, I think there's no question. So I would like to thank you once again for joining the opportunity days Q1 2017 for Thai Oil, and we look forward to see you again next time. Thank you. สวัสดีครับ